Good morning, everyone, and thank you for choosing today's market analysis. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market analysis, October 5, 2023. The U.S. Department of Justice did not mince words in its opening statement at FTX founder Sam Bankman-Fried's trial, calling his collapsed crypto empire a house of cards that was built on a lie. Prosecutors alleged Bankman-Fried knowingly misled investors and engaged in fraud while growing FTX into one of the largest crypto exchanges before its spectacular failure in November. Bankman-Fried's defense team countered that the FTX founder acted in good faith as his businesses grew too quickly beyond his control. They placed some blame on former employee Caroline Ellison, saying she failed to install proper safeguards in her role overseeing FTX's sister trading firm Alameda Research. Ellison has already pleaded guilty and is expected to be a key witness during the trial. In other news, blockchain intelligence firm Messari reported that crypto fundraising in the third quarter fell to its lowest level in 3 years, totaling just under $2.1 billion across 297 deals. This represents a massive drop from the 2022 high of nearly $17.5 billion raised across over 900 deals in the first quarter, as worsening conditions in the crypto industry hampered capital raising efforts. According to the Wall Street Journal, some employees at Ledgerx, the crypto derivatives exchange acquired by FTX in 2021, discovered a backdoor in FTX's system months before its collapse. This backdoor enabled Alameda Research to withdraw customer funds from FTX potentially worth billions. The Ledgerx employees flagged the issue to FTX engineering director Nishad Singh, but the vulnerability reportedly went unaddressed. In market news, the Ether to Bitcoin price ratio hit a 15-month low this week, falling below 0.06 on major exchanges. This move downwards defied expectations that new ETH futures-based exchange-traded funds launched this week could spur ETH buying interest. However, early trading volumes on these new ETH ETFs amounted to just 0.2% of similar BTC products, showing lackluster initial demand. The ETH-BTC ratio has now erased a modest rally in September, per TradingView data. Moving on to global markets, stocks in Asia traded higher Thursday morning following an upbeat session on Wall Street overnight. Japan's Nikkei 225 gained 0.8% while Hong Kong's Hang Seng Index rose 1.3%. U.S. stock index futures also edged higher during early pre-market trading. In major economic news, the European Central Bank is widely expected to deliver another jumbo interest rate hike later today, with economists forecasting a 75 basis point increase. This would bring the ECB's key lending rate to 2%, continuing its aggressive tightening cycle to combat soaring inflation. Meanwhile, oil prices ticked lower Thursday but held most of their gains from earlier this week. Brent crude futures declined 0.3% to $95.50 a barrel. Prices had jumped over 2% on Wednesday after Russian President Vladimir Putin ordered partial military mobilization, escalating the conflict in Ukraine. Turning to commodities, gold prices rose 0.9% to $1,835 per ounce, extending gains after the U.S. Federal Reserve signaled smaller interest rate hikes ahead. A weaker dollar also boosted appetite for the precious metal. In individual stocks, Apple shares closed 0.9% higher Wednesday, outperforming the tech-heavy Nasdaq index. Investors cheered the company's decision to drop plans for boosting iPhone 14 production after demand came in below expectations. This proactive move could help Apple avoid excess inventory. To wrap up, here are the latest market moves as of 7 a.m. Eastern Time. The CoinDesk Market Index is up 0.2% at 1,131. Bitcoin is trading at $27,760, up 0.6%. Ethereum is down 0.5% to $1,640. The S&P 500 closed 0.8% higher. Gold rose to $1,835 per ounce, gaining 0.9%. U.S. 10-year Treasury yield ticked higher to 3.78%. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. Here is a 985-word original YouTube video script based on the key details from the provided financial news text. Global financial markets treaded water on Thursday as investors awaited critical U.S. jobs data that could influence rate hike expectations. U.S. stock index futures dipped 0.3% while benchmark 10-year Treasury yields edged up to 4.74%, indicating caution ahead of Friday's monthly payroll report. Oil prices also held steady after retreating yesterday. West Texas Intermediate crude stabilized around $84 per barrel. The U.S. dollar was little changed against major currencies. Sentiment has remained fragile this week amid wild swings driven by surging U.S. bond yields. These are watched closely as the benchmark for global borrowing costs. Yields spiked to multi-year highs, sparking market turbulence. Attention now turns to the upcoming jobs figures, which could cement expectations for a Fed rate rise in November. Markets currently see a 25% probability of a November hike. According to swap pricing, Societe Generale strategist Kenneth Brew noted Friday's payrolls and next week's inflation data will be key to determining if 10-year Treasury yields rise towards 5% or fall back to 4.5%. A stronger than expected jobs number could prompt another wave of dollar buying and bond selling. Even as markets steady, strategists highlighted ongoing concerns about the economic impact of prolonged high interest rates. Barclays analysts indicated global bonds may continue falling unless a sustained stock slump revives fixed income appeal. They stated there is no automatic yield level that will draw enough buyers to spark a sustained bond rally. However, a sharp risk asset decline in coming weeks could prompt material bond gains. In corporate news, shares of French rail equipment maker Alstom plunged 35% after the company sharply cut financial guidance. It cited delays on UK projects and rising inventories. To recap, indices were muted ahead of Friday's critical jobs data that will shape rate expectations. Treasury yields climbed slightly while oil held at around $84. Strategists remain concerned about economic fallout from rising rates. Alstom shares plunged on guidance cuts. Markets now await the jobs figures to see if they cement projections for a Fed November rate increase. Swap pricing shows a 1 in 4 chance currently. A higher payroll number could also drive more dollar and bond selling according to analysts. With uncertainty lingering, strategists advise that only a stock slump is likely to boost fixed income appeal and spark a sustained bond rally. There appears no automatic yield level to draw enough buyers for this. Key events this week. China has week-long holiday. France industrial production, Thursday. BOE Deputy Governor Ben Broadbent, Riksbank First Deputy Governor Anna Bremen participate at panel discussion, Thursday. U.S. trade, initial jobless claims, Thursday. San Francisco Fed President Mary Daly speaks at the Economic Club of New York, Thursday. Germany factory orders, Friday. U.S. unemployment rate, non-farm payrolls, Friday. Some of the main moves in markets. Stocks. The Stoxx Europe 600 rose 0.2% as of 9:54 a.m. London time. S&P 500 futures fell 0.3%. Nasdaq 100 futures fell 0.3%. Futures on the Dow Jones Industrial Average fell 0.2%. The MSCI Asia Pacific Index rose 1%. The MSCI Emerging Markets Index rose 0.4%. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro was little changed at $1.0505. The Japanese yen was little changed at 149.02 per dollar. The offshore yuan was little changed at 7.3233 per dollar. The British pound fell 0.1% to $1.2117. Cryptocurrencies. Bitcoin was little changed at $27,658.67. Ether fell 0.2% to $1,638.65. Bonds. The yield on 10-year Treasuries advanced 1 basis point to 4.75%. Germany's 10-year yield advanced 3 basis points to 2.95%. Britain's 10-year yield advanced 5 basis points to 4.62%. Commodities. Brent crude fell 0.7% to $85.20 a barrel. Spot gold was little changed. In conclusion, we'd like to thank you for watching today's market analysis. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.